Hi, everyone, and welcome to today's issue briefing on what's next for decentralized finance. It's a growing and quickly evolving space, and I'm excited to be joined today by the World Economic Forum Head of Blockchain and Digital Assets, Sheila Warren. Sheila, thank you so much for joining us and helping us set the stage. Can you walk us through why this is an important topic and what work the World Economic Forum is doing in this space?
Thanks, Samantha. It's my pleasure. DeFi is getting a lot of attention, in part because it offers the potential for innovation and the creation of new services that can improve potentially financial markets. Of course, along with these new opportunities come new challenges, and we'll be exploring these today with a panel of expert guests. This particular issue briefing is coming at a critical time when policy and regulatory questions are really top of mind across a variety of jurisdictions. And to help policymakers navigate this ever-changing space, the forum recently issued a two-part series in collaboration with the Wharton School at the University of Pennsylvania. This included a white paper called DeFi Beyond the Hype that explores DeFi and its various permutations, and a DeFi policymaker toolkit that really explores the policymaking landscape. These papers are available online to anyone interested in this subject.
Thanks, Sheila. Really looking forward to this conversation. And with that, I'll hand it over to Deirdre Brosa from CNBC. Deirdre, thanks for joining us.
Hey, Samita and Sheila, thank you so much for that introduction. I'm thrilled and honored to be here with this really great group of experts, especially at a time when blockchain and decentralized finance is making up so much of our coverage on CNBC, whether it's markets, economy, regulation. But a lot of our conversation does center around a few really key things, two of them being regulation and disruption. So why don't we start at that intersection with our panel? And Robert, I'm going to pose this question to you first. If DeFi is a derivative of financial markets that's disruptive, but will also eventually be regulated, why do we need it? And I'm starting with you because Compound, of course, is building the tools and products for this DeFi ecosystem.
Yeah, I'll start with why DeFi is needed. So DeFi offers the ability to create financial products in financial markets that are faster, more fair, more transparent, and more efficient than existing financial products and markets. And this is done by using computer programs deployed onto blockchains to create these products and markets. Now, this is an important new technology. It's transformative, and it's going to eventually change the way that all financial markets operate. And in order to see this technology succeed, there has to be, one, the availability for entrepreneurs and new ideas to flourish, and two, the sort of societal expectations around how it gets integrated into existing financial markets and existing society safely and effectively.
Okay, you mentioned three things there. DeFi is faster, more fair, and efficient, which is the case you hear for why this is better than the current financial system. But Paul, maybe I'll come to you because you're managing director at Deutsche Bank, and you're part of a system that many people think could be disrupted by DeFi. So same question to you. Why do we or don't we need this, especially if some of the things that Robert just mentioned, faster, more fair, efficient, if regulation comes in, does that hurt that case? Does it make the system less fast, less efficient?
I hope not, Deirdre. I think the thing that's exciting is the possibilities, and obviously Robert referred to a couple of those already. But financial markets have evolved this way, as far back I think of any of us can remember. If we think about the transition of stock exchanges moving from floor-based venues onto electronic markets, that was obviously a big step change at the time. As we've moved from physical paper securities into dematerialized securities. The markets will always find a way to take the friction out. And I think what we're trying to do with decentralized finance to a degree is to bifurcate between the technology, which I think can make us faster and more efficient and more agile, and then some of the products that have actually brought decentralized finance to the fore. And what we need to do is almost kind of separate the two. And I think we've had similar guidance along those lines, even from our regulators on both sides of the Atlantic.
Let me ask now, does anyone else want to jump in on this before we sort of move on to the next topic of regulation on why we do or don't need decentralized finance? I think everyone's probably on the page that there's some really important aspects of it, but the risks too. Does anyone, perhaps Miller, want to speak to this?
Sure. Well, I think number one, the fundamental problem that all of these systems are trying to solve is that there are 7 billion plus people in the world, and 2 of them have access to what we consider to be everyday financial services. And that delta is something that we as a human society should be thinking about closing, because access to financial services and basic financial services is pretty much a prerequisite to wealth creation more broadly. I think the internet provides a very efficient way to bring people into the financial system, and an internet native financial system like decentralized finance could be a great solution to that problem. To your second point, there are going to be new risks and new concerns in decentralized finance that are unique from the traditional financial system. There are also going to be similar risks that, the same risks that exist in the traditional financial system replicated in the decentralized financial system. I think, it's incumbent on industry and it's incumbent on regulators to work together to figure out a way that we can mitigate those risks while still leaving room for those benefits of DeFi, which are really rooted in its, openness, in its permissionless nature, to coexist and, to Robert's point, meet those societal expectations while retaining the potential benefits of an internet native financial system.
Right, and that balance between risks and benefits and providing services to the underbanked or non-banked is such a key question that governments and policymakers and regulators are all figuring out at a different pace, right? We've got a huge economy like China, experimenting with its own digital currency. And Jehudi, I want to come to you as well, because the Colombian government and policymakers have really sort of been experimenting on the leading edge and embracing cryptocurrency and the blockchain technology. Just, recently allowing the first commercial bank to test deposits and withdrawals with a crypto exchange. Perhaps you could talk a little bit about why Colombia is embracing DeFi.
That's correct. As we saw in the other questions, there are huge opportunities there, especially for Colombia. The opportunity of inclusion is very important, but there are also risks. This is very clear, and that's why it needs to be some regulation. There are technical risks, there are financial risks, there are governance risks. The way that we take a regulation in order to balance between innovation and consumer protections is by the way of regulatory sandbox. These are protected instances within the regulator when the entrepreneurs can try these new technologies in a safe way. We, as you mentioned, are running one right now for like traditional crypto, let's call it, with centralized exchanges, and we are looking forward to do something similar regarding DeFi. But this is a challenge definitely because there is no this central authority to regulate. So we need to find a way.
Right. And Sheila, DeFi, of course, is global. What I'm hearing from pretty much everyone is that regulation is going to be an essential part of DeFi. But how do you do that when it is decentralized and governments, policymakers are taking such different approaches? Why is it important then, or how should we think about the coordination and importance of public and private cooperation?
Well, I want to start by emphasizing the points others have made about the equity angle here. I think that we can all acknowledge, and the pandemic has certainly spotlighted the inequities in our current financial system. The fact that many people all over the world, including here in the United States, simply do not have access to what we consider traditional or ordinary financial services. That is a gap that we need to address as a society, and it's a gap that's becoming ever escalating. It's getting wider and wider and wider, which is leading to all kinds of unrest all over the world. It's a big problem. So if our goal is to address some of this inequity, our goal is actually to provide a more democratized access to financial services to a broader part of the population, then we have to examine the likelihood that our current regulatory environment doesn't necessarily lead to that. That means that if we just port over regulations from existing traditional financial services over into this brand new system without deeply understanding the way it works, the way it operates, and its potential for innovation, then we risk engaging in what I like to call premature regulation. The problem with premature regulation is that you often cut off innovation, and that innovation is exactly what is going to provide the reduction in equity that we currently see in our system. So if we assume that it's modeled directly after traditional services and we regulate it the exact same way, then the more likely outcome is that we are going to not enable people to actually get the benefit from these particular services. So right now we're seeing, I think, understandably, concerns about fraud prevention and consumer protection and things like this. But in these new systems, these kinds of concepts operate in a very different way. So as we saw with the early days of the internet, the dialogue with those who are really experts in building and shaping this space is just of critical importance. And I do think we're seeing some of that dialogue happen in various jurisdictions, but in my mind, we're still very much in an education phase rather than the phase where we're really ready to regulate and understand how to shape this.
Right, and this is something that comes up again and again in DeFi, the issue of equity and serving the underbanked or non-banked. But Paul, I wonder from you, because you are at a big bank, why can't traditional finance address these issues like DeFi can? And perhaps not even just traditional banks, but some of the big fintech companies that I cover, like PayPal and Square, have long had their eye on this issue, and they are also embracing decentralized finance and cryptocurrencies. Why do we need DeFi?
Well, if DeFi gives us an opportunity to be more consistent across jurisdictions, then hopefully that makes it easier to deliver the same or similar types of products to a broader community, and hopefully that would lead to a greater level of financial inclusion. Certainly, of course, if we look at basic products like payments, right, that would probably be an area where where that would begin. The difficult part, though,
Paul,
is the regulation.
I just wonder too, why can't, Visa and MasterCard, when you look at payments, are supposed to be these global systems, right? But they're still can be stodgy and slow. And even something like transferring money, there's fintechs that have come up that have been able to do this faster. So I just wonder, why are banks slow to do this? And I guess the issue of coordination.
Well, do keep in mind, like, some of the service providers that make, those credit card networks actually work underneath are still commercial banks like Deutsche Bank. So even the credit card networks don't actually operate in isolation, right? It's part of this broader, international network that makes those connections actually happen. I mean, if those things are moved into a different way of transferring value, storing value, then of course those possibilities might be made easier because of decentralized finance. I think, though, that one needs to keep in mind that the regulation is jurisdictional, and therefore, of course, the regulations in one country need to be satisfied to the same standard as they are in another country. What we don't want to do, of course, is move towards just the lowest common denominator, and we want to be able to actually, obviously, keep, customer protection rules, data privacy rules, to a similar standard to what we have in one of the more, developed economies. So I think that, the point that Sheila was making around how do we create a conversation around the global regulatory community that might be able to bring everybody along on the journey, that was actually one of the inspirations for the policymakers toolkit that was mentioned earlier.
Robert, I want to come to you on some comments that SEC Chair Gary Gensler made on our air on CNBC recently. He likened the regulation of crypto and decentralized finance to the auto industry, saying that the auto industry and people didn't really drive cars until governments laid out the driving rules, and that really caused it to take off. He said, only by bringing things inside and clearly within our public policy goals that a technology has a chance of broader adoption. Do you agree?
I actually disagree vehemently on this analogy. So I think that DeFi in particular is much more like the early internet, in that its success was a result of not constricting how it gets used and where it gets used. It was a global technology, And it's one that was completely unexpected and disruptive to the way almost everything was going to operate. And its success came from allowing it to flourish without trying to prematurely add rules for how and where and why it can be used. If we had in the 90s, started to restrict how the internet could be used, we probably wouldn't have the massive societal improvements to efficiency, the new businesses, and the transformation of almost everything we do. And I think DeFi in particular is the same way. It's not like the auto industry. There's people who are excited to use it today. There's massive demand. There's massive interest in building products on top of it. It's unlike automobiles where people were afraid to use it,
That's so interesting because we spend a lot of time on this on CNBC, especially in our technology coverage. And some would argue that that lack of regulation at the beginning has now made it so difficult to regulate these companies and led to a lot of unintended consequences and, regulations, laws not being updated. I wonder if there's any of our other panelists would like to disagree with Robert and maybe argue why regulation at the early innings of this is essential.
I will say I find myself on the middle between Robert and the SEC. As we say, innovation is the most important thing. There are a lot of opportunities here, but there are also risks. And the rules also give clarity to the people that want to do innovation. So maybe it's not a regulatory like laws yet, but some guidance might be helpful.
Does anyone else want to jump in here?
Yeah, Deirdre, I think what's really challenging about this particular moment and space is that I think we all agree that, technology is not something that we want to regulate as a general matter. We don't really want to regulate code, right? However, in this particular case with DeFi, the protocol is what is giving way to the services. It's all kind of happening at the same time. And what's been really challenging, I think, has been how do you recognize the challenges, the risks that are in kind of the services without trying to mess with the underlying technology? Because I do agree that it's actually really important that we recognize that the technology really does need to have its own ecosystem and kind of be thriving. So it's one of the reasons why the approach that we took at the forum was really this policymakers canvas and kind of how do you weigh in your jurisdiction, thinking about yourself as a global actor, thinking about the global digital economy, which this is all a part of. And I think every government has interest in their citizens being able to participate fully in the global digital economy, because that's just what really leads to higher standards of living and better outcomes. So if that's the case, then I think it's really important to think about, where are we regulating our citizens' actions and where they might be harmed, and where are we actually inadvertently regulating the underlying technology, which is really not something that we ought to be focusing on doing.
It feels like such a difficult task. And Miller, on the education side of this, I wonder what your thoughts are. And also should note that Gary Gensler is someone who spent a lot of time studying and leaning into this. When you have other policymakers, I'm thinking policymakers here in the US, like Treasury Secretary Janet Yellen and Fed Chair Jay Powell, who are also looking at this market with a different view. Where do you find that balance, Miller? And how do you make sure that, people who are embracing and users who are embracing decentralized finance are educated enough to know where the risks are and where, regulation could help or hinder?
Sure. Well, I think I just want to reiterate Robert's point that I think, unlike the automobile, there's clear demand for these decentralized financial services in the U.S. And I think it might be worthwhile for regulators to perhaps reflect on why that's the case, because it intuitively reflects perhaps some failure in the traditional financial system that is driving people to use these services. That being said, I think that it's incumbent on the industry. I think all the proponents of this technology have an intuitive understanding or a conceptual understanding of why these things are valuable, and we we see clearly, why these are useful to society. But to skeptics, conceptual and intuitive arguments aren't very convincing. So, number one, I think, for folks like Chairman Gensler and Secretary Yellen, it's important for the industry to come up with the facts about, where are these services helping people access new financial services, and, who is participating in DeFi markets, why are they participating in DeFi markets, et cetera. I also think it's incumbent on the industry, and I think it's imperative to end up in a place that's logical and protects people's ability to leverage the benefits of these systems, for the industry to start thinking about potential ways to mitigate the risks across the system. To Sheila's point earlier, there's no way to shoehorn traditional regulation, which is predicated on, the role of financial intermediaries and gatekeepers. There's no way to shoehorn DeFi into those regulatory frameworks, because, of course, it's designed to eliminate those intermediaries. So no matter what, we as the industry and regulators are going to have to come up with a new way to mitigate risks in this system. And to your point, Deidre, I definitely think we're gonna have to rely on educating people more, because again, these systems run on the internet, and no matter what, there's gonna be a way for people to access them. So, we, the industry, and I think regulators also definitely have an interest in arming people with the knowledge and the expertise to do that in a safe, responsible way.
Robert, after hearing from the other panelists, would you allow that there's any space for regulation in DeFi markets?
Absolutely, but I think that regulating a brand new and novel technology isn't trying to apply old regulations to something completely new. I think it's going to demand a new and original approach to regulating. For example, DeFi offers the opportunity to make completely autonomous financial products and markets. And user safety doesn't come from trying to protect, how users interact with it. It comes from making sure that the actual infrastructure itself is safe. Because, the loss of funds or technical issues or failures in a DeFi protocol are really the largest risk to users. So I think regulators are going to have to put on a different hat in some sense and look at this from a different angle when they think about what types of regulations should exist to ensure that the users of these systems are protected. It's not going to look like the same problems that exist in current financial products and markets. It's going to look like entirely new problems.
Who's equipped to do that, Robert? Is it policymakers who have been brought up, right, in these traditional financial systems who, think that Bitcoin's use case is at a method of payment, right, when really it's much more than that? Are these the right people? Who should be doing this?
Well, I think historically there's always a process by which regulators educate themselves on new topics. And I think the same exact thing is going to occur with DeFi, where they're starting off from a position where it's a brand new technology that emerged out of left field just a couple of years ago. And it's going to take a few years, I think, for the existing regulators to become fully educated about how these systems work. I don't think it requires new regulators. I think it just requires a process of learning that is going to unfold over the next couple of years.
And Sheila, what are you seeing then on that side? Are regulators, policymakers, are they embracing it? Are they, sometimes I mentioned Gary Gensler, but Elizabeth Warren, Senator Warren was also on our air not long ago comparing the crypto markets to snake oil salesmen. And, I'm sure I can see some of you guys shaking your heads like that. That's not the right comparison. And obviously you're going to have people on very different sides of this. But Sheila, do you think that cooperation, policymakers, regulation is trending into this idea of learning more instead of just looking at some of the riskiest parts of this market?
Well, Deirdre, I think it really varies jurisdiction to jurisdiction and person to person. I think we've seen efforts by various policymakers around the world to reach out and educate themselves. I think that in this particular instance, this does require some understanding of the underlying technology. And that is something where I think that the crypto industry has made attempts to really understand, explain rather, how this technology really works. I don't know how well that has landed necessarily with various individuals, again, across the world. It's not just a US phenomenon. There is attention being paid by policymakers really all over the world at this point to DeFi and to the crypto ecosystem in general. So I agree with previous previous comments that I don't think it requires new regulators. I do think it requires a fundamental understanding by the policymakers that they are going to have to put a bit of a technical hat on and get at least baseline familiar with how these protocols work, how they really work, or not how they theoretically work, how they actually work in practice in real life. And without that, I think that we are going to see more attempts at, again, what I call premature regulation, where you regulate kind of a piece of it that maybe is catching the attention of the popular press or the popular imagination, with perhaps all the best intentions, but in doing so, what you don't realize that you really are stifling a lot of the innovation that, again, to my earlier point, could actually benefit members of society that I think a lot of these policymakers actually want to help. I don't think that any policymakers would say, no, we want to double down on an equitable system. We want to make sure we're enhancing unfairness. Nobody would say that. However, the ways in which regulation might come down could have that result. And that is what I personally am very concerned about. And so I think that it behooves all of us who do have the ability to kind of share this knowledge to offer it up, and to do so in a very humble but open way, and to really lean into these conversations and to clarify that really you can't regulate this space at all without understanding why the technology provides such novel opportunities, and, to the points others have made, challenge.
I want to talk a little bit about stablecoins, because we've spent a lot of time in it on CBC, and it's been called, one of the riskiest parts of the DeFi ecosystem. Paul, I'll come to you on this. The question of what's backing stablecoins, they're thought to be one-to-one to the US dollar, like a Tether, which is now the third most popular cryptocurrency by market cap, holding a huge amount of commercial paper and almost looking like a money market fund, but without being held to the same standards. Do stablecoins present a broader risk to not just the DeFi ecosystem, but broader financial system and credit markets?
I think that's a possibility, although I think an unlikely one. I think, Deirdre, the direction this takes us in, and you mentioned it at the beginning, is what are the central banks going to do to also respond to this new technology and make that part of their ecosystem? So one of the things that's also happening very rapidly in the background, and there's been an explosion of interest over the last 12 months from central banks all over the world, is what do central bank-backed digital currencies look like? How do they interact with commercial banks? How do they interact with local and obviously international regulation? And how do you make sure that they are a useful tool as far as monetary policy is concerned? Because obviously what you get into the realms of is programmable money, right? And therefore you can have more flexibility and new possibilities that weren't available through traditional systems. That then obviously takes us in a further direction as to whether or not it's a corporate or a retail consumer or anybody who participates obviously in the monetary system in one country. Like, how do they hold and how do they interact with that? So I think one of the possibilities that takes us from the virtual world into something that we would use every day, and we've obviously talked about payments and transfer of value already, it would be like the potential replacement of stable coins by these central bank solutions, which might, we will see no doubt an acceleration over the next couple of years.
Certainly there's that acceleration of interest and discussion in places all over the world, really. But Robert, I come back to this question: does the regulation, the introduction of central bank digital currencies into the system make them less useful? We take a look at, I don't even have to take a central bank digital currency, but what Facebook was trying to do with Libra. Now, Diem hasn't really succeeded because it's been brought into the system. People in the cryptocurrency ecosystem want to use Tether for the precise reason that it is unregulated, right?
Yeah, I think there's a broad misunderstanding that a central bank digital currency is going to meet the need and the use case that stablecoins currently offer. And I think they offer different things. So the huge amount of demand that we're seeing for stablecoins, whether they're regulated, unregulated, or somewhat regulated stablecoins, is that they're open and permissionless. And so the dollars themselves are able to be used anywhere, and the dollars are able to be programmed into new use cases, new financial products, and new systems. The biggest advantage that DeFi offers is that it can take an asset which looks very basic, but add a layer of programmability on top of it to create entirely new experiences and use cases. And so the stablecoins that are currently being demanded are popular and demanded because they're not just being used to trade with, which you could do with a central bank digital currency, but they're being used to programmatically interact with DeFi applications and serve as, essentially like a foundation for new products. And so that's where the demand's coming from. I don't think a CBDC can meet it if the CBDC itself isn't open and programmable.
Are they risky, Robert? A cryptocurrency like Tether, could that be? I've heard it been called by some critics the black swan of the cryptocurrency market.
Absolutely. Stablecoins have varying degrees of risk, and this is a function of its varying degrees of transparency. So stablecoins that have regular and transparent audits of their collateral are the least risky. Stablecoins like Tether that have none or extremely infrequent and opaque audits are very risky and very dangerous. And so I think there's also a third category that we should all be aware of, which is stablecoins which don't attempt to be backed one-to-one with traditional dollars or traditional currencies, which rely on alternate mechanisms. And these are in some ways the most risky because they rely on game theory or social dynamics to maintain their value. And so there's varying degrees of risk. I think there's various use cases and demands for stablecoins, and over time, society is going to find the stablecoins that work best.
Miller, would love for you to weigh in here, especially on the issue of Tether, which is involved in some investigations and is just playing such a larger part of this market these days.
Yeah, no, I mean, I generally agree with Robert's sentiments on Tether, which is that a custodial stable coin that doesn't provide much transparency into what is backing it is going to be an inherently risky asset. I think, also the other panelists have alluded to what are real large societal questions that are going to need to be debated before a central bank digital currency is created to begin with and then adopted at all. And, the one that jumps to the front of my mind is privacy. I think one of the reasons that China perhaps is pursuing a central bank digital currency is that it provides total transparency into every financial transaction that's conducted with the Chinese CBDC. So, that has implications beyond just financial services. That's a question about how we want to organize ourselves as a society, and that's going to take a long time to work through. I also think, to Robert's point, there's already a market, at least here in the United States and around the world, of stablecoins. I think that by the time we get to those answers, there'll be a private stablecoin or some stablecoin that's been brought into the regulatory system in some way that the market chooses to be the one that reaches mass adoption.
Sheila, jump in here.
I think I just really want to highlight, there's this tendency, I think, to think of stablecoins or CBDC as somehow monolithic. And the point I think that you're hearing Robert and Miller really highlight is that there are design choices that go into these things. You can design how much privacy, goes into these different kinds of offerings. And so the idea that one CBDC is just like another and that all of those are exactly analogous to stablecoins is just fundamentally flawed. So what's going to have to happen over time is the market, as others have noted, is going to make decisions about which of these choices, technical choices and policy choices, are the ones that most meet the needs of the broadest group of people. And that's how you're going to get adoption.
Yeah, that's a great point. And when it comes to a Chinese central bank digital currency, right, and correct me if I'm wrong, the aim there isn't necessarily transparent or anonymity, right? One of the key parts of this market, it's actually the opposite, right? They're creating their own so that they can actually keep track of where the money's going or the currency is going better. So Sheila, when you say that sort of the market will decide, what do you do with a central bank currency like the one that China is trying to decide that maybe goes against some of the core principles of the decentralized finance market?
Yeah, I'm certainly not going to speak to the motivations of the Chinese government or the PBOC, because I think those are documented to the extent that they are, and they're opaque, I think, to most of the world, what those specific motivations might be. Nevertheless, it does seem that the way that is being rolled out, it is the whether intended or not, the consequence is that there is a lot of visibility at the transaction level into what exactly is happening, and one can speculate as to why that might be of value, to the Chinese government and the PBOC. I do think when it comes to, when you think about dollarization, the fact that a lot of countries do actually either use the dollar or peg to the dollar, are a lot of countries going to accept digital yuan as their unit of account? Are they going to start using it in their economies? I think that's going to be a question that you have to address the implications around the privacy when you make that choice as a policy matter. And so, as others of my colleagues on the panel have said, I'm not so sure that you're going to see the mass worldwide adoption of that particular offering if it turns out that what is actually rolled out in outside of the borders of China itself winds up giving full visibility to transaction level to the PBS government. Well, I guess we'll have to see what happens there. Mm-hmm. I do think other offerings are on the market that have different choices that have been baked into the design that may prove to be more palatable to a broader variety of jurisdictions.
A key and complicated question, right? Does popularity equal trust? When you think about a tether, it's, use case is velocity and efficiency, but that doesn't necessarily mean you can trust what it's backing. Jehudi, though, I do want to get to you because I would love to know how Colombia is thinking about a central bank-backed digital currency.
First, I want to point out that this is definitely a different category than cryptocurrencies, because it's actually the opposite. One is decentralized, the other one is centralized. You lose many of the characteristics there. It can have its use case if it's well thought out, if it's programmable, for instance, but I think it's very important that it's respectful of the personal rights of the people. For instance, privacy is a human right, in my opinion. And also, it can have things like expiration date, as we have seen announced for the coins, that I think is not good for the users. So if I have to choose, I will say that the open monetary network is better. There is a use case for the currency of the central banks.
Okay. We have a little bit of time left. Paul, maybe I'll come back to you. I would love to know, we've talked about the risks of decentralized finance, but what are some of the risks of not getting on board, whether that be traditional finance players, policymakers, critics that are fighting this movement?
I think it's going to be necessary for any bank that wants to compete in the future to make sure that they have an ability to interact and interoperate with DeFi systems, as they emerge, right? And obviously, that's taken into account, of course, that obviously as a regulated institution, we have to be able to make sure that we stay within the guardrails. But something that we study, all the time, and we know that some of our competitors are doing exactly the same, is what is the order in which we'll start to offer these kind of services to traditional banking customers, and then how do we create the on-ramp and off-ramp for moving between, say, fiat currencies and DeFi assets, and of course making those interoperate with traditional financial services. So I think there's an acceptance already that this is actually going to happen. The question I think that everyone has been asking is how and in what order. Is it going to be custody products first? Is it going to be payments products first? Is it going to be clearing that comes first? So we don't know the answer to those, and it may actually, of course, be a different set of answers in different countries and different regions. And that's obviously, I think, to Sheila's point regarding, pace of adoption. But I think there will be a parallel operation between traditional financial services and the DeFi equivalent of those products. But essentially, the question will be, where does the law intersect between the two? I think the point that's been made a couple of times already on the panel is the regulators don't actually want to regulate the technology. What they want to do is regulate financial products, and they want to look after end users and customers. And I think if we stick with those principles, we won't go too far on.
Robert, I wonder if you think that traditional banks can move fast enough to be a part of this movement, or because they are subject to so much regulation already, or if it's going to be newer companies in this space. I mentioned the fintechs earlier, like Square and PayPal, Coinbase. Do you think that they have a better chance of pioneering sort of the next phase of decentralized finance? Will the banks, essentially, the traditional ones, be left behind?
Well, I think right now we're seeing a lot of traditional banks exploring and trying to learn and catch up as quickly as they can. But that's not where the growth in this industry is coming from. It's coming from really a bottom-up approach where new protocols, new organizations, and new communities are really the ones driving most of the innovations in DeFi. We're seeing in the middle, between banks and bottom-up, fintech companies like you mentioned that are getting extremely excited about integrating some of the best results of DeFi. And so I think we're going to see adoption coming from the middle. And I think the largest banks and institutions are going to have to work really, really hard not to be left behind or outflanked from a competitive nature from everyone around them.
Miller, I'll come to you on the same question. What do you think who's going to lead this next movement? Who's best positioned?
Well, I definitely think there's a massive competitive advantage to whichever banks dive into this first. Of course, I'm a massive proponent of this whole, new financial system. I also think that financial intermediaries and intermediate financial services are valuable, and a lot of people, find convenience using them. So I definitely think, the banks that lean into this system and try to figure out a way to interoperate with them and provide, additional and better services to their customers by leveraging these protocols are going to be well positioned to compete with their counterparts in the future.
And Jehudi, before I get to Sheila for the last word, I wonder, what have you learned along the way? I know that, we've been talking about headlines from Colombia and you guys embracing the movement. What any lessons that you would give to other governments and policymakers trying to navigate this complicated space?
When is so new the technology as it is crypto, DeFi, or other technologies like artificial intelligence, is not very good idea to regulate the state away or to make them fit all regulations. For instance, it doesn't make sense. Most of the regulations for the traditional financial system depend on a central institution. That's the regulatory touch point. So it doesn't make sense to make it fit. We need ways to learn as government, as regulators, and to also allow innovation. We found the way to do this with the sandbox that I mentioned, and then after we have these data points, then we can do a smart regulation if it's needed.
And Sheila, as I mentioned, last word to you as we have these conversations, and I've certainly learned a lot from this panel. All the insights were absolutely fascinating. Talk a little bit about what you guys are trying to achieve at the World Economic Forum by having these open dialogues and global perspectives, bringing them all together. Are you and I guess at the crux of that, are you optimistic that we will see the benefits of decentralized finance and that the risks are sort of starting to be figured out?
Well, my optimism, I think, ebbs and flows day to day. This is a very fast-moving space. There's an awful lot that's happening. I do remain concerned, as I've mentioned at multiple points, that premature regulation may cut off avenues to addressing inequity and promoting innovation. So I am concerned about that, and my views on that do change, as the landscape shifts ever around us. I think that, what we're really focused on is ensuring that this dialogue does continue. As I noted, this is a complicated area. There is a tendency, I think, to want to box it, to make it black and white, to pose it as fully oppositional to traditional financial services, which it's not, or to posit that it's completely different from anything that came before, with all of them not. And really, it's a bit of both. I think that the technology underlying it, again, is a critical component of what is the potential possibilities in this particular space, and an understanding of that does take some time to get familiar with. So our hope and our focus is that policymakers will understand that they have to balance a variety of considerations when it comes time to shaping the growth in this space and the direction of this space. I do think that there's tremendous potential in this space, like I said, to address inequity, to create more efficiencies in services, and really to push traditional finance to think about how they might improve. I see a world in which there are, to some extent, differing systems that service different people and different geographies potentially. And I think that we have to come together as a global community of those really interested in creating this innovation and creating kind of a new world where financial services, where wealth creation, where access to capital is not limited to an elite few, but really is accessible to the broader population. So everyone can pursue their dreams and goals, and we can create a much more equitable and fairer society. That's my hope. That's what I'm optimistic about, Deirdre, and certainly our work is focused on achieving that aim.
I can see smiles around the panel. I think optimism is key here. It continues to pepper our coverage at CNBC as well, and fascinating discussion. I bet we could go on for another hour. But I want to thank all of you for participating, giving candid answers. And Sheila, thank you so much for having me moderate this. I learned a ton that I can bring to our coverage. So thank you, everyone.
Thank you all.
Thank you.